Hello and welcome to Startup Street. I'm Arundhati Ramnan, and joining me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup space. EMR software provider for doctors HealthPlix Technologies raises $22 million in a CDC round of funding led by Avatar Venture Partners, SICK Venture Capital, and existing investors. The startup will use funds to ramp up doctor-first production innovation, enhance the technology stack, and scale user acquisition efforts.
Finance bill hikes the tax on royalty or technical fees paid by foreign non-resident companies from 10% to 20%. No relief for startups from angel tax provisions, and no change in taxes for REITs and InvITs.
The TDS on online gaming applications will now be effective from April 1st, as against an earlier provision of July 1st. This comes as the online gaming industry stakeholders had approached the Central Board of Direct Taxes and the Prime Minister's office to oppose changes in TDS and GST on the sector.
5 executives at Nykaa resign. Among the exits are Chief Commercial Operations Officer Manoj Gandhi, Chief Business Officer of Fashion Division Gopal Asthana, and Chief Executive Officer of Wholesale Business Vikas Gupta. Now, all executives of Nykaa. Spokesperson has told CNBC-TV18 that they see some of these mid-level exits as part of the standard annual appraisal cycle and transition process.
Twitter users who have the blue verified tick marks against their names under the Legacy Verified program will not be able to avail of it from April 1st onwards without subscription, says the microblogging site. However, Elon Musk has clarified that any individual person's Twitter account affiliated with a verified organization is automatically verified.
And US lawmakers come together to grill TikTok CEO for over 5 hours. They raise questions over the company's Chinese ownership and data privacy concerns.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, 5 executives at Nykaa have resigned. The latest departures come at a time when competition in the beauty space is only intensifying and the company's stock price is falling. Among the exits are Chief Commercial Operations Officer Manoj Gandhi, Chief Business Officer of Fashion Division Gopal Asthana, and Chief Executive Officer of Wholesale Business Vikas Gupta. All executives of Nykaa. A Nykaa spokesperson said some of these mid-level exits as a part of the standard annual appraisal and transition process, wherein people exit due to performance or to pursue other opportunities. The statement added, and I quote, "Voluntary and involuntary exits are expected in a fast-paced, growth-focused consumer tech organization with over 3,000 on-roll employees. Nykaa, which surged 96% in a blockbuster market debut in 2021, has now plunged, falling around 68% from its all-time high in November of 2021.
All right, and what's brewing today? EdTech unicorn Physics Bala has acquired UAE-based EdTech startup Knowledge Planet, marking its foray into the global market. Now it plans to leverage this partnership to reach the maximum number of students in the Middle East, North Africa region, and also expand beyond the UAE to Saudi Arabia, Oman, and Qatar through its seat at Knowledge Planet. And joining me now to take this conversation forward is Prateek Maheshwari, who is the co-founder of Physics Bala, and also joining me is my colleague from the Mumbai studio, Arundhati Ramanan. Prateek, welcome to Startup Street, and thank you very much for patiently waiting by. This is your first overseas bet, so to speak. One, what made you zero in on Knowledge Planet specifically, and why the Middle East region? And how do you expect this to unlock the $250 million opportunity you said it would for the offline test market?
Hello Ritu, hello Arundhati. So we are already present digitally in the MENA region. We are already serving MENA region students digitally through our YouTube distributions. And now with the help of Knowledge Planet, we will have a physical footprints in the MENA regions. We have Knowledge Planet having amazing track record of results from past 10 years. And they have 13 running centers in UAE region, and we will expand to Qatar, Abu Dhabi, Oman, and Saudi regions. So this is to serve the Indian diaspora of that region, and after that we will venture into 1:1 STEM learning of that region.
All right. Hi, Prateek. Arundhati here. But what's next? You've outlined these plans, but Which other international markets are you looking to enter? And what would be the strategy here? How significant will global markets be for PhysicsWallah versus your India market?
So, as compared to the total business and revenue, it's not very significant. And for the next 1 year, we are just focusing on Middle East region, not to expanding beyond any Middle East region.
All right, so for the next 1 year at least, the focus is on the Middle East before you look further. But, even to do that, Prateek, are you looking at any sort of fundraising to meet these requirements? You've made a plenty of acquisitions. To continue growing at this pace, will you require funding? How soon and how much?
No. So this is the third consecutive year of our profitability. So we are fundamentally, from day zero, we are a profitable startup. So there is no dire need of cash to run the business. So we run on a cash generating business. Unlike other players, we are very much profitable. And the acquisition opportunities are pretty much prominent in the current market scenario where the VC funding is drying up as compared to past 2 years. And we have partnered with several companies in multiple sectors to have an inorganic push, but we are not looking for any active fundraise, or we are not running any mandate of fundraise internally.
So not looking at any active fundraise, and you did say inorganic opportunities. And since you said that you've been on an acquisition spree, previously acquired Prep Online, Altus Vortex, InNeuron.ai and Freeco, and now Knowledge Planet. Is that the route for your growth? Are there more in the pipeline in India or overseas? What's the plan? Are you in talks with anybody?
No, so we are not having any active conversations in terms of acquisitions. And as compared to build versus buy, our thesis is to build things internally. And for a geographical expansion in southern India, we are actively looking at assets and M&A opportunities are there, but the company's thesis and focus is to acquiring and building capability in-house rather than taking an acquisition route.
Prateek, let me come back to the question of fundraising. You said you're not, engaging with any investment bankers or not talking to any private equity players yet. But let me just come back and ask you, how soon do you think you'll have to do that? I mean, is there a timeline you have in mind when you would have to require capital? Because reports said you were looking at a valuation of $3.3 billion in the market for $250 million. No smoke without fire, right?
Mm-hmm. No. So we are not looking with for any active fundraise. So fundamentally, we are a very profitable startup, and I cannot completely deny that we'll not look in future. Also, we may do a transformational M&A down the line 1 year, but that's not a strict timeline which we are looking at. So we are pretty much flexible, but there's no active mandate running within the company and with any banker.
All right, Prateek, so no active mandate, but you said in the next 1 year timeline, perhaps there is something you could be looking at. Thank you very much for talking to us here on Startup Street. It's been a pleasure. Thank you.
Thank you.
Well, on that note, it is time for our special series, the Unicorn Health Check, where we're creating a report card of our most valued startups, delving deep into what's working and what's not. Today, we're going to look at India's startups in the mobility space. Akhil Vishwanath is standing by with the details. Akhil, over to you.
Mobility has been a deeply personal issue in India. Public commute in most Indian cities is chaotic and overburdened. Then there is also the problem of affordability when it comes to the cost of owning a personal vehicle. Today, we focus on unicorns that are seeking to help Indians commute easily, from Ola in ride-hailing and EV to used car retailers such as Cars24, Spinny, Cardeco and Droom. Let's try and understand what's working and what's not for India's mobility unicorns, starting with Ola. India's shared mobility market stood at about $10 billion in FY21. Now remember, that's a year that brought the industry to a near standstill as the pandemic kept people in their homes. The impact can be seen in Ola's performance that year, a 1,000 crore loss in ride-hailing. There has been a strong recovery, but not without post-pandemic speed breakers. Ola, Uber and Rapido are under pressure to improve payout to delivery partners and tackle the problem of overpricing and cancellations, which has been frustrating for users around the country. That has also brought severe regulatory scrutiny, hurting operations in key markets of Delhi NCR, Mumbai and Bengaluru. Then there is BlueSmart, which is bringing an urgency to Ola and Uber's plans to electrify their fleets. Now, talking about electric vehicles, Ola Electric has been at the forefront of the e-scooter revolution in India. More than 1 lakh Ola S1 scooters were sold in 2022, which the company claims has enabled it to hit an annual revenue run rate of $1 billion. The company says profitability is also within touching distance. However, several of these scooters have gone up in flames in what's been an industry-wide crisis of EV fires. More recently, Ola Electric told its 2 lakh scooter owners that it will voluntarily replace the front fork arm free of cost. The company, however, has denied any claims of safety concerns. At the group level, Ola has also seen top-level exits and job cuts. It even shut down its used cars unit, Ola Cars. That too within 8 months of starting it. Now, which brings us to our next set of mobility unicorns, the used car retailers. India's used car unicorns are racing hard for a chunk of the $25 billion fragmented used car market, which is dominated by unorganized local dealers. Even if we include players such as Mahindra First Choice or Maruti True Value, the unorganized share is low. Car ownership per 1,000 people also remains low, but that signals a big opportunity in aspiring India. As you can see, China has 5 times more car owners than India. It was during the pandemic that these unicorns found the speed, as preference for personal mobility went up as against shared transport. Record funding followed, which led to the rise of 4 used car unicorns by the end of 2021, including Droom. But funding has been hard to come by ever since. A shift from a classifieds marketplace play to an end-to-end model with refurbishment centers and home delivery has meant a capital-intensive shift. They are in losses. The cash burn is highest at Spinny, which spent nearly 6 rupees to earn a rupee of operating revenue in FY22. If we cut to 2023, we are in the new normal. There has been a reversal in pandemic trends, inflation has gone up too, and we are now seeing a slowdown in the pre-owned car market. However, the silver lining is all the players are saying that they could turn profitable in the next 2 to 3 years. To cut costs, Cars24 has even laid off 600 employees. Also, for now, there is no rush to race to public markets. Droom, which turned unicorn in 2021, has withdrawn its IPO plan after the tech rout. The only listed player from the space, CarTrade, which went public in 2021, is down 70% since listing. That too, despite being profitable in the 9-month period of FY23. For now, the mobility unicorns are cruising, but it will be some time before they can shift into a higher gear.
Well, that's a health check on the mobility startups. Akhil, thank you very much for taking us through that. We're going to take a short break on that note, but up next, on our Future Female Forward series, we're going to put the spotlight on a startup which is using Ayurveda to solve gynecological problems. Stay tuned for that. Welcome back to Startup Street. Now, 92% of all women were found to have 1 or more gynecological diseases, as per a report by National Institute of Health. Now, in our special series, Future Female Forward, we will put the spotlight on a startup which is using Ayurveda to solve gynecological and lifestyle-related disorders that women face today. Here's the story of Gyneveda.
From the last 7 years, I have been facing problem from PCOD, and after marriage, I wanted to conceive, but the thing is, I was not able to conceive, and many people told me that you won't be able to conceive with PCOD.
I was having a pigmentation problem since many years. I tried many things like local applications, I visited many dermat, but the problem never solved.
I was detected with thyroid around 3 years ago. That's when the doctors had said that I'll be on medication lifelong, and just the thought of taking these medicines lifelong was something that didn't sit well with me.
We as women roughly go through about 400 period cycles. And during these 400 cycles, which is roughly about 40 years, we go through various kind of problems, whether it's hormonal imbalance, irregular periods, PCOS, which is known as polycystic ovarian syndrome, vaginal infections, issues with trying to conceive naturally, and many other things. But I think what happens is we give so much of importance to taking care of others. Our own health becomes the last priority. As a narrative, we wanted to change.
Founded in 2019, femtech startup Gyneveda is aiming to solve gynecological and lifestyle-related disorders women face from puberty to menopause through its Ayurveda-enabled self-care solutions. The firm claims to have invented a gynecology bot that uses artificial intelligence to enable women self-diagnose her reproductive health.
We have a range of products for women from the age of 15 until the age of 55. So the first category that we established in the year 2019 was our menstrual health products. So everything to do around period health and freedom from PCOS. We saw lots of consumer insights coming to us saying that when women have PCOS, and especially women in the reproductive age, were finding it difficult to conceive, that's when we decided to bring out India's first natural ovulatory and fertility support supplement. Our other range of products are around skin and hair.
According to the Gyneveda's research, 70% of women in India are suffering from low hemoglobin or are anemic. To tackle this, they have launched wellness supplements like iron and folic acid. The company is now looking to cater to niche categories such as respiratory issues, diabetes, osteoporosis, breast health, and menopause.
We have our products classified under APM, which is Ayurvedic Proprietary Medicines. They are developed in-house by our research and development team. All of our products are FDA India certified. They are manufactured at locations which are GMP certified, which is good manufacturing practices.
Gyneveda has reached 3 lakh women residing in over 20,000 pin codes of India and now aims to go global.
I just consumed Gyneveda for around last 10 months. My periods were regular as well, and then I just skipped one of the month of my periods and I was pregnant.
I saw the advertisement of Gyneveda. After 90 days almost, I started seeing results on my skin, my face. It started healing.
I ordered this medicine called Kanchana Guglu from Gyneveda. The dosage of my medication has gone from 100 mcg to 25 mcg.
Currently operating via D2C channels like its website and e-commerce marketplaces, Nykaa, Amazon, Flipkart, PharmEasy, NetMeds and Tata 1mg, Gyneveda is now looking to go omni-channel.
Gyneveda revenues have tripled year on year to reach 100 crores annualized revenue run rate today. Consumer returning rate is about 52% for the business. We've clocked an average order value, which is AOV, of 2,000 rupees. The next 3 years is about looking at, again, tripling the business year on year.
The Ayurveda-backed women and healthcare startup has so far raised $10 million in Series A funding round led by India Alternatives Fund and others. With this funding, the company is looking to strengthen its R&D, formulating new Ayurvedic offerings, onboarding talent and expanding distribution channels. The aim is to change the lives of 1 million women, which according to the company is still a fraction of the billion women worldwide that need Ayurvedic solutions for gender-specific disorders. Aishwarya Anand for CNBC-TV18.
It is Friday and it's time to see how the startup space fared in terms of new deals this week. 7 deals took place, valued at $67 million, as per data from Venture Intelligence. Here are some notable deals. EV charging startup Charge Plus Zone bagged $46 million from Blue Orchard, Airfare, Marketplace. Mr. Fly raised $8 million from Cornerstone Venture Partners and others. Out-of-hospital care firm Sukino Healthcare got over $6 million from Stakeboat Capital and others. That's not all. B2B fruits and vegetable suppliers Sorted raised $5 million from the likes of BNext, White Ventures and NB Ventures. and contract management enabler Docify got almost $1 million from Pentathlon Ventures, Silver Needle VC, and others. Overall, the startup world has seen 149 deals in 2023 so far, valued at over $2,100 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.